Hello and welcome to The Hash on CoinDesk TV and the CoinDesk Podcast Network. We are here to bring you the latest and greatest in crypto news for the day. I'm Jen Sanasi. We've got Danny Nelson on the show today. We've got Will Foxley. How are you guys doing? Happy Wednesday.
Happy Wednesday.
Okay, well, I can see you guys are very, very happy on this Wednesday. Let's talk about some news then, shall we? Binance, some big news coming out of Binance. They plan to re-enter Japan in August. This is made possible by the exchange's purchase of regulated exchange, Secura Exchange, Bitcoin, all while the firm withdraws its German crypto license application. I feel like Binance has been doing a little bit of a regulatory dance in which countries they're deciding to operate in and which ones they are deciding to pull out from. Will, I will toss this off to you. What do you make of these Binance headlines this morning? I think we don't. Oh, there's Will.
I could take it from to start with, if that's okay. So, we're seeing Binance pulling out of the German market, or rather stopping its attempt to get back into that market at the same time as it's going right back into the Japanese market that it left two years ago. Oh, sorry, we're having technical difficulties. Are we good? All right, we're gonna keep moving forward. So it's not so much a decision of Binance as to whether it should or shouldn't play, as it is the regulator's decision. In Germany, it seems to have read the writing on the wall and decided, well, we're not going to make it through here. Just like in now Belgium and the Netherlands and Austria, we're going to stop applying for this license and get out of Dodge before the regulator tells us to hit the road. And whereas in Japan, after 2 years of non-compliance or being on the sideline, Binance has succeeded in getting back into that market after getting the proper regulatory clearance. So, Will, I'll throw it over to you. What's your take?
Okay, I'm here now. I think we had some audio problems, but we're going now. Apologies for that, Danny. Binance is making moves. So we have this announcement with Japan. We'll talk about the one in Germany in a second. Japan news, of course, is huge. Japan is one of the largest economies in the world. And the fact that it's been very difficult for Binance to enter into that area after the 2-year hiatus just speaks to the fact that the Japanese regulators have taken crypto very seriously. Huge anecdote here within this realm is FTX Japan. It was forced to wind down with the shutter of FTX Global. All the users of FTX Japan got their money outright. They just easily liquidated it. Everything was done correctly and securely for users, so no one took any losses. That's compared to a lot of the other FTX global institutions that were out there, and the FTX US and FTX International, which are still going through the Chapter 11 proceedings, and people are crossing their fingers that they get 10 cents on the dollar. And I think that just speaks to how Japan has taken regulation very seriously. They are focused on reserves. They are focused on making sure that everyone who comes into Japan, into the digital asset sector, does register with the government, so they have a face to the business as operating here. Binance had to pull out 2 years ago, and now they're going to be able to step in by purchasing another exchange. And this is a pretty common tactic, right? Where you maybe don't want to go through like all the hurdles and leaps to be able to get into a new jurisdiction. So you go and purchase someone who already has all the licensing, and then you just replace the business entirely with your own. And that's what it looks like here. Pretty smart move. I don't know if we brought up the Germany news, but I might just bring it up anyways, which is Germany, or the Binance is pulling out of Germany after deciding that it doesn't want to pursue its licensing with BaFin, Germany's financial provider. This, of course, follows after their decision to move out of both the Netherlands and a few other countries within Europe due to stricter licensing regimes in those countries. Jen?
I think Binance's lawyers are very, very hard at work here, trying to navigate, of course, the lawsuit in the U.S., but also figuring out where they can operate without being struck down by the financial regulators there. There are some comments in the article on Germany that said the situation both in the global market and regulation has changed significantly. Binance still intends to apply for appropriate licensing in Germany, but it is essential that our submission accurately reflects these changes. I feel feel like there are some strategic decisions being made here. Will, just like you mentioned, the acquisition of a firm that's already regulated in Japan is a nice way for Binance to continue operating in some way, shape, or form in the country. And I think that, there's a lot of weighing of the pros and cons of staying in certain countries and leaving certain countries, or staying on the sidelines and waiting to see what regulators are going to do in certain jurisdictions. I think it's important to note in June, CZ said that France will remain the flagship center in Europe for Binance, and that's despite the money laundering probe that's going on there. I think that's kind of indicative of how exchanges might be looking at the European Union under new regulation that's coming out. Of course, once there's new regulation in the EU in 2024, exchanges or firms will just need one license to operate across the entire block, which I think will be interesting. I think we're going to see maybe even more exchanges flock to Europe and try and get licensed there. But that's my take on Binance. They're still keeping their head above water despite these headlines that come out with them. I would say on a weekly basis now, more than a weekly basis. Danny, any final words here?
Yeah, it's definitely a lot of headlines that you don't want to see if you're an exchange operator. But in the German market specifically, for those who are already in the door, they seem to be getting a little more bullish. Just yesterday, Coinbase announced that it would list a number of tokens, including Arbitrum's token and Helium's token, in Germany for its German customers. That's not a game-changing business decision, but it does indicate that their lawyers and their teams have decided that the environment in Germany is well enough for them to move ahead with these token listings. So they're trying to capitalize on this market that Binance has decided it can't play in. So we're seeing this reshuffling globally. It makes you wonder if Coinbase can and will grow to the point that Binance plays, where it really is the keeper of the gates, the gatekeeper, if you will, for global crypto volumes. I don't know if we'll get there anytime soon, but I'm sure that Brian Armstrong would like that mantle.
All right, we will have to wait and see what happens there. But let's head off to Nigeria. They are changing the model for their CBDC, the e-Naira, to promote more use. In an effort to push for broader adoption, the Central Bank of Nigeria has updated their app to enable contactless payments. The bank hadn't responded to a request for more information at press time. A lot going on in Nigeria around the use of this CBDC. I know we've spoken about it a few times on the show, but Will, what do you make of this? Do you think that an update on the app is going to be what it takes to get Nigerians really behind the e-Naira?
It's going to take a little bit longer than that, a little more than that as well. A lot of people don't realize this, but Nigeria has one of the most vibrant tech sectors in all of Africa and just globally. Jack Dorsey himself, creator of Twitter and also the CEO of Block, has long held aspirations to move over to Nigeria, move over to Africa full time. Why? Because there's a lot of people who think just like him over there, and so he wanted to make the move. And so you see that side of things with the tech. On the other side of things, the Nigerian government has this desire to move into the CBDC landscape, whether that's because of incentives on controlling monetary policy or because they want to do something with remittances. Nigeria has a very large remittance market. It's hard to tell. At the basis, though, you have to look at how this is rolling out compared to other countries. It does seem to be moving faster than other countries. I mean, they're talking about changes to their mobile wallet while the U.S. is still debating if we're even going to have a CBDC, right? So there's two different arguments here. And I think the one thing that we should point out is that a lot of people in Nigeria are not going to be able to use this mobile wallet because they're still on a cash-based economy, especially eastern parts of the country, which are still very far removed away from using a mobile wallet for any sort of payment. Right? There's a cash-based economy, maybe even payment in kind. So it's weird to look at this economy and think of how a CBDC could be fit in here, but there are definitely portions of the economy where this could be a big use case. That being said, the volumes and the amount of people using it are pretty low. This article does mention the wallet count. It says about 13 million wallets or so are open in the country. Wallet count's not a great metric, of course, though, because anyone can open a wallet and just make tons of them. So you have a hard time understanding who's assigned to a wallet. It could be one person with 1,000 wallets or one person with one wallet. At the end of the day, these are still very small numbers, but they're iterating at the very least. Danny?
Yeah, and to get that true growth for any CBDC or any e-commerce payment for that matter, Nigeria is going to have to rethink the way that its basic economy works. There's a huge sector of it, I think it's in the hundreds of billions of dollars in the informal economy that is cash-based. And it's because merchants and vendors and these small-time businesses, they're not set up to take anything other than a cash payment. And having a CBDC requires two things. It requires you to have the technology to accept it, and also for you to be interacting with other businesses that make it worth your while to even take this form of money. So in order for this really to catch fire in Nigeria, the entire economy is going to have a lot more digital infrastructure put in place, whether that's through mobile phone proliferation or just through point of sale kiosks. That's going to be the key to even thinking about making this a successful product in Nigeria.
Yeah, you both mentioned the informal economy, and the number for that is the country has a $220 billion informal economy that's mostly run on cash. There's little infrastructure built out for use of the e-naira, for vendors who are incorporated in this $220 billion number when we talk about that economy. So I think that there is definitely a long road ahead here. I read the story and I think back to March when we were seeing protests over the e-naira, and the protests kind of were twofold. They took into account this cash shortage. So there's a limit on how much Nigerians, or there was a limit at least, I'm not sure if that's still in place, on how much Nigerians could withdraw in cash on a daily basis as they were being pushed towards the e-naira. And then the money was actually being redesigned so that enhanced the shortfall of cash in the country. When that story came out back in March, it was reported that less than 0.5% of Nigerians were using the CBDC, but more than 50% of Nigerians had used crypto before. So that points to a bigger problem for me than just infrastructure. It points to possibly, distrust in the government and financial policy in the country. So I think that there are definitely a lot of roadblocks for Nigeria to overcome. But I do also think that other countries are probably watching what's happening with the e-naira, watching how the country rolls out the CBDC, taking notes and learning for CBDC projects in the Western world. Will, any final thoughts here? No?
Yeah, this is just the country to watch probably with in terms of CBDC development. So keep an eye on Nigeria.
All right, we are going to take a quick break, and when we come back, we are going to explore why DeFi daily volume is dropping to 7-month lows. Stick around to find out why.
We are back on the hash and we are talking about DeFi, and it's not going to be that exciting, or rather not that happy a discussion, because we're talking about new 7-month lows. That's right. The DeFi sector is getting pummeled. We're seeing it fall to 7-month lows in terms of volume, because there's just been this massive drop off in activity in wallets interacting with protocols, in protocols not getting hacked. And so there's a couple of things that are feeding into this drawdown. One is the fact that protocols continue to lose money to hackers, whether that's through maybe more sophisticated North Korean attacks on bridges, or just through really simple re-entrancy attacks that these protocols, these lending and trading markets really should be protected against. Well, they're not, and maybe that's leading to lower consumer confidence. Regardless, it's definitely leading to lower volumes. And it's not just being seen in the Ethereum ecosystem. In Solana, too, there's been a drop-off. Now, I think it's worth noting that some protocols are having more success in weathering this storm than others. In Solana, at least, a couple of protocols are achieving higher volumes recently by rolling out new systems such as points that would incentivize people to use them. But it's not actually bringing new money into the crypto ecosystem, into DeFi. It's just having the existing money sloshed from one place to the next. So that's not really a sustainable form of growth, because it's not growth at all. So, Will, I'll start with you. What's your take on the DeFi drawdown?
Yeah, the reentrancy attacks and other hacks are definitely a way of losing consumer confidence, as you put it there, Danny, which is probably one of my favorite phrases I've heard, along with DeFi. I mean, this is like the realm of degens, right, where people kind of play to lose money in many instances. They're not too curious about that, but we are seeing a lot of loss in confidence in DeFi right now. I talked to a DeFi founder a few months ago about the secular decline in interest in DeFi, as he put it. Mostly that we're seeing total volume locked, or TVL, the common metric for understanding how many crypto assets and the dollars value of those things are within the DeFi ecosystem. And it's continually dropping over time. I mean, we're not seeing like the steady cliffs, or the cliffs that we saw last year in 2022 with the fall of so many of these ecosystems. We're just seeing money slowly slide out of these things, and hacks and breaks of bridges and stuff like that does take money out a little bit more quickly than necessarily people withdrawing their money. But overall, there is a decline in interest in DeFi, which is leading to a decline in the amount of value within DeFi. We're almost back to that $1 billion market that you mentioned there, which back in believe it was early 2020 is when we broke through that $1 billion threshold. That was a huge deal for the DeFi market. The fact that this many people were there willing to participate in this new leg for Ethereum, right? And it's a huge deal. And now we're kind of going back down. I think this is just symptomatic, however, of the larger market. There's not a lot of interest in protocols. There's not a lot of interest in yield. There's not a lot of interest in the new app or dApp that's being designed. And that's just where we are at in the cycle right now. And that's okay. For right now, there's still people building stuff. A lot of treasuries actually took a good use of their money this last cycle, moving into stable coins or assets that were more robust than the ICO era. I do think that we see this going back up right in the near future, but right now it's definitely a secular decline. Jen?
Okay, I have some things to ponder, and you two can ponder with me or just leave me to question the universe on my own. I think when I read this article, I thought about, first of all, regulatory uncertainty. So we spoke about Binance maybe, on the sidelines waiting to see what happens with regulation in different jurisdictions. I feel like consumers, people who participate in the DeFi ecosystem, maybe people who are intrigued by different aspects of DeFi, are also maybe sitting on the sidelines waiting to see what happens with regulation, not only in the US, but abroad as well. DeFi came up in some drafts of MiCA regulation in the EU. We have the Lamas-Gillibrand bill here in the US that's looking to define DeFi. And so I think, people who operate in DeFi every day, Danny, like you mentioned, they're probably there and funds are being sloshed around. But I think newcomers might be just watching what's happening and waiting to see what happens from a regulatory perspective. And I don't know. I know in our next story, we're going to talk about VC participation in DeFi. But do you both think that maybe VCs that right now who may have bought up tokens, who may have been investing in projects, might be looking at things like AI for the exact reason that consumers might be, like regulatory atmosphere?
Yeah, really quick. I got fact check myself. I got my numbers confused. So there's $1 billion
I thought you were
around.
Opine with me.
Well, I will in a moment. There's $1 billion transactional volume, but TVL has dropped from 45 billion to about 43 billion in July. So definitely a significant slide there, but not as significant as I was stating earlier. Are people going to be becoming more interested in this? Is that generally your question? Or VCs becoming more interested in DeFi?
I'm saying that maybe VCs who previously were buying up tokens to participate in DeFi might be paused because of the regulatory atmosphere. And that's probably why we're also not seeing new money come into DeFi, because regulators are kind of looking at DeFi. A bunch of tokens were listed in the SEC lawsuits against Binance and Coinbase. There's bills being looked at in Congress. I don't know. Those are just my thoughts, my very mid-informed thoughts.
I have some thoughts as well, but give it to Danny first, then I'll go.
I have equally mid-informed thoughts. I love that mid-informed, but I'll take a thwack. I'll take a thwack at it anyway. I will say some of these VCs, they're sitting on the sidelines partly because they have to. They agreed to multi-year token lockups, and their valueless tokens are just sitting there inaccessible for the time being as they wait to get their hands on it. And then with that moved toward AI, I don't know if that's specifically the reason why we're seeing DeFi in particular losing a lot of volume and a lot of value, but it's certainly a reason why some of the existing venture investors who aren't so eager to jump into risky crypto investments are just as eager to throw their money at risky AI investments, because it's the new bell at the ball, so to speak. It's the hot new thing. And there's a lot more upside that they see right now in betting on this brand new industry as opposed to the one that's associated with FTX and all these blowouts in the last year or so.
Yeah, just to jump in there on what Jen was saying, I think there's still interest in DeFi. I do think that the DeFi market did make a mistake, which the ICO era did as well, which is it's very difficult to launch a token, sustain interest in it. It's very difficult to get the tokenomics right. So a lot of these DeFi protocols became failures because of their early success with these tokens. I still think that there's people who want to invest in this. Paradigm, for instance, just put out a notice this last week stating that they have a bunch of different topics that are interested in investing in the seed stage. And that included some DeFi-esque protocols, mostly dealing with L2s and MEV. So I think a lot of the infrastructure and the underlying stuff is where people are interested in, as opposed to some of the bigger projects like we saw last cycle, like lending protocols or anything of that sort nature. Jen?
I think we can talk about MakerDAO now. That's a great segue.
A16Z? Yeah, it's time.
A16Z and Maker. It's time.
Okay. That's good. Great transition. Okay. Venture capital firm A16Z unloads $7 million of MKR tokens, or the Maker token, as the price soars. This is according to blockchain analytics, essentially looking at the wallets are known by A16Z to hold MKR tokens. They're transferred to a fresh address and then moved over to Coinbase with the presumed selling of those tokens on Coinbase. Of course, once those tokens are on Coinbase, we don't have a look inside the actual engine itself, but you can assume that when people do move tokens onto an exchange, they're likely going to sell them as opposed to just hold them there. Of course, A16Z has been a long-time proponent and holder of MKR. They purchased these tokens as far back as 2018. Why are they selling these tokens? Well, it really comes down to a new proposal by MakerDAO's Rune Christensen talking about the end game for MakerDAO. Can it be further decentralized or not? He proposed an idea to further decentralize MakerDAO by spinning up even more DAOs to control different aspects and elements within the largest decentralized stablecoin machine, MakerDAO. And A16Z didn't really like it. So it looks like they're taking their bag, just going to sell it right when the price is not doing too shabby at all. Danny?
Yeah, I gotta say, as someone who covers DAOs often, a DAO being on top of other sub-DAOs, it's a thing that exists. It's just these extrapolations and these complexities just make things harder to accomplish in crypto because crypto governance is really difficult. And I can't blame A16Z for hearing something like that and thinking, well, maybe it's time that we sell the local top, move on. Because it's if you're seeing the market rally and you have an opportunity to unload part of your position, transaction? Well, from a fiduciary perspective, it might be the right thing to do. So A16Z here, they've loaded 7 million. I saw on chain that they had sent 0.5 maker to another new wallet recently, and that might be a signal that they're getting ready to move some more, because there are those little test transactions. I have to say, I remember back from when I first got into Bitcoin, if you don't want to send the whole Bitcoin at once, you don't want to send the whole token position at once because you're not so sure you have the address right, the first thing you do is you send a little bit as a little test just to make sure you have the numbers correct. So A16Z has done that again. There might be more movements coming. Jen, I'll toss it over to you.
Yeah, no, I agree with both of you. There was some tension there when this endgame plan was published, and A16Z said that the DAO was adequately decentralized. But in some way, A16Z, to me, selling these tokens makes the DAO even more decentralized, right? They have less tokens. That means they have less say in some of these votes moving forward. And I have to note that A16Z said the reason why they didn't support these sub-DAOs was largely because of regulatory concerns, having regulators understand what's going on. I think, and this is not what they said, this is now me thinking based on those comments. I think that you have a DAO, you have regulators trying to understand what's going on with DAOs. How do they regulate it? How do we oversee these ecosystems that have their own tokens and tokenomics? And now you introduce sub-DAOs, and it just kind of further complicates things when we're in a very complicated time in our history. So I think that this makes sense. Danny, to your point, they may be selling off the rest of their tokens, but I believe that they still have just under 2% left. So we'll have to wait and see what happens with those. And I guess we're going to leave the show. There you go. All right, let's leave the show on that note. It's been a wonderful Wednesday show. Thank you for listening to us on the CoinDesk Podcast Network and watching us on CoinDesk TV. I'm Jen Sanasi. That's Will Foxley beside me and Danny Nelson beside him. We hope you have a great day, and we'll see you tomorrow at the same time and same place. Bye.